In a world where every shift matters, we are joined by leaders who are not just observers, but active stakeholders across the economy. As the winds of change sweep through the nation, what will it take for India to leap into the next phase of growth? Today on the Morning Brief podcast, we explore the dynamic intersection of opportunities, risks, and changing rates, propelling India into a new era of growth. As we bring you the insights from the Economic Times CEO Roundtable, where influential voices converge to shape the business landscape of India and identify the risks and challenges.
Historically in India, what's happened is that at the top of every bull market, we had a large participation, but all disappeared very quickly.
We are in a world where there is going to be price for money and money is not going to be available.
I don't worry so much about the job challenge. I think like with any sort of technological change, there will be some losers and some winners.
It's very difficult to internalize and understand how quickly things are changing and how much we need to sort of, speed up in order to keep up.
What I see in Indian youth is not having the tendency of relying on just being a job seeker, but becoming a risk taker.
I think as we get India from this X to 2X to 3X consumption of FMCG, we are going to see waste and pollution increase. And how do we manage that is one of the challenges that we need to work together to solve.
I think the energy transition is a very exciting thing, and I don't think we'll just stop with solar and so on.
We need a second green revolution based on research, innovation. We're a country of small farmers, so we really shouldn't copy solutions from other markets.
But before that, setting the agenda is Satyen Gajwani, Vice Chairman of Times Internet.
Welcome, everybody, and thank you for joining us as we celebrate the 25th edition of the Economic Times Awards for Corporate Excellence, the most prestigious honor for business achievement. The world over, economies and politics are volatile. And yet, when we look at India, it is remarkably stable, optimistic, and exciting. There are real gains that we're seeing happen in our economy here. There's real economic growth. There's value creation in our markets. And we have a thriving startup ecosystem. The World Bank, in its mid-year review, listed India as the second fastest growing economy in the G20 and more than double the average growth of the average emerging market in the world. At India's scale and size, this level of growth is significant. Goldman Sachs has recently said that by 2075, India should become the second largest economy in the world. It's particularly exciting when we think about the level of talent and capability that we have in our country. We have the largest pool of English STEM graduates in the world and a powerful youth that will grow and power our economy going forward. Most exciting is the growth and potential that we have thanks to our infrastructure. Our physical infrastructure is resilient and strong, with thousands of kilometers of roads being laid and world-class airports being developed all around us. But more exciting than our physical infrastructure is our virtual infrastructure. Today, we are the world's envy in terms of our digital platforms and capabilities. We have over 1 billion Aadhaar registrations, and last year, over 75 billion digital payments happened through our stack. The most developed economies in the world are envious of us and set India's platforms as the benchmark that they want to achieve for their own markets. Best of all, this infrastructure that we have is not just empowering, but it's enabling all facets and all segments of society in India. And it can be a true enabler of inclusive growth in our country. I'm very fortunate that we get to be up here today and talk about the country that we're in because it's so easy to be optimistic. And yet, we're fortunate today to have the scions of industry of our ecosystem really help us understand more about what's ahead. I'm hoping that they will share openly and candidly their perspectives on what we have as potential to capture, as well as the challenges that we'll have to face and overcome.
So what are the opportunities to grab and the pitfalls to avoid? Economic Times Executive Editor Shrutijeet KK sits down with N. Chandrasekaran, Chairman Tata Sons, Prabha Narasimhan, CEO of Colgate-Palmolive India, Uday Kotak, founder of Kotak Mahindra Bank, Arundhati Bhattacharya, CEO Salesforce India, Romal Shetty, CEO of Deloitte South Asia, Rishad Premji, Chairman Wipro, Nithin Kamath, founder Zerodha, Lakshmi Venu, Joint MD Sundaram Clayton, and Kunal Shah, CEO, CRED.
Thank you. And it's a real delight to be in conversation with such a star-studded panel. Our theme today is how can India thrive amidst global turmoil? What is the global turmoil we are talking about? I think a lot of it is quite self-evident. We have two hot wars going on right now, extracting a great deal of human cost, a lot of tragedies unfolding. As a consequence, and even otherwise, there is a lot of macroeconomic tailwinds around the world. There is currency volatility, there is high inflation in several economies. And there is a very real threat of the world splitting into blocks in a way that hasn't happened since the Cold War. In fact, the Harvard historian Niall Ferguson says that the Russia-Ukraine war is probably the one hot war before the next Cold War. And if that happens, it'll be a dramatic reversal of the forces of globalization that has played out and that has benefited a great deal of economies, especially the emerging markets like India. These forces have helped integrate our economies, supply chains, exports, all of that with the world. And those beneficial wins, as it were, stand the risk of being reversed. Apart from geopolitics and economics, there is also the unfolding reality that we no longer have a shared reality that we can rely on, a shared reality that are based on facts. There is misinformation, disinformation, weaponized misinformation, and with deep fakes and AI, what is reality itself and what is verifiable reality has become quite hard, and there are forces that are exploiting all of this. And of course, with the rise of generative AI, there is the question that artificial general intelligence is probably a doorstep. And if that is so, what are going to be the consequences? It is famously said that that's the last invention that humans will make. Will there be mass unemployment? Will countries have to come up with policies to deal with those kind of scenarios? So that's the unfolding global scenario. And of course, as Satyen said, India is incredibly well poised to meet any challenges that come its way and also to exploit the opportunities that will doubtless arise from these factors. These are some of the elements that I wish to put before the panel today. With that kind of a context, what I would like to do is to open it up first for opening remarks. We'll start from the other end. What I would like the panel to do is to touch upon one element of both of these. What is the one aspect of global turmoil that you are familiar with that is impacting your business, your industry? And what is one aspect of what India can do to thrive under the circumstances? If you could touch upon one point in each of these categories, that would be great.
Our industry is kind of limited to the startup ecosystem that we're dealing with. I think the investors that we're dealing with are telling us an interesting story that in our markets, it seems to be this complete distress and we should not be acting. And in this market, you're looking at everything just thriving. So it's often the situation of a mother feeling cold and putting sweater on the kid. So the investors are kind of looking at the markets and completely confused on how to deal with that because they see the enthusiasm and they go back to the original market and are confused. But I think in things that we need to change, I think the real issue we'll deal with is the per capita income that will kick in. The female participation of labor is a key input lever for us to get to a $10 trillion economy. And I think that numbers are not looking great. And we've done Beti Bachao, Beti Padhao, and I think the Beti Kamao part is still pending.
Pleasure to be here. And I think it's exciting to be in India in business at a time that is really India's decade. We're quite different from what we were 8 years ago. And today, like Satyen mentioned, we are a bright spot in a global VUCA world. If I look at my two industries, agriculture, we make farm equipment and auto components, I do see the opportunities really outweighing the challenges in this volatility context. In agriculture, we have food security, itself a beacon of stability, but the time is definitely ripe for an ag-tech-driven second green revolution. We need a second green revolution based on research, innovation. We're a country of small farmers, so we really shouldn't copy solutions from other markets. We need to innovate in India for India and with a multi-stakeholder ecosystem. Similar, and that will give not only growth, but per capita and equitable growth across the rural sector also. Similarly, in manufacturing, it continues to be a core strength. As we can see, we're providing stability for a lot of investments coming in. At the same time, if we want the kind of enduring advantage that buffers us from economic cycles in the long run, we need R&D once again. Significantly more R&D spend, innovation, intellectual property housed in India for India and the world, and down the value chain. Not just the big OEs, but also your metallurgy, your tool rooms, in a sense like Germany has in a volatile world. So I think for me, in my two industries, it's very positive. We have a great policy environment. The Prime Minister has also identified some of these areas like farmers as a key focus group. We have a collaborative policy environment and great engineering muscle. So really, it's up to us to make the most of it.
Thank you for having me here. Couple of things. Of course, they're in 150 plus countries. When I look at the 150 plus countries, India obviously stands out. And we are sort of across all sectors. So we're not actually in one sector as professional services. We provide all kinds of services. So, and every time there's been a crisis globally, India has actually done well. Deloitte India has actually done well. I don't want crisis to happen globally, but that's what has happened. And the innovations that we're seeing, the transformations that we're seeing, and the quality of talent that India actually has far exceeds any kind of global talent. And I'm not talking about the lowest levels of leadership, at the highest levels of leadership I'm talking about. Now, in terms of what India needs to do more is we've done a lot of things faster, cheaper, better. But I think real innovation, real value, I think that is, and I think Lakshmi spoke about the fact of how much do we spend on R&D. And I think that is world-class products coming out of India. If that should be a significant focus going forward.
First of all, good evening, everybody. And thank you, E.T., for having me here. Every time I look at India, I really am amazed by the potential we have. But along with the amazement, there is a restlessness about how soon we can really come up to potential. Because though we have come a long way, I think we still have much to achieve. And if you are looking at my industry, of course, the overwhelming pace of technology evolution is something that it's very difficult to internalize and understand how quickly things are changing and how much we need to sort of, speed up in order to keep up. And especially where Indian industry is concerned, I think there is a lot that they need to leapfrog to. Having said that, if you ask me what I most worry about or what I think is a very big priority for me, there is only one word that can answer most of our problems, and that's education. And there I would say skilling is the need of the hour. While we have huge number of very talented people, but they still need to be skilled in the right way. I think, that's something that's a priority, and that's what I worry about. Thank you.
I think first on your question about our industry, which is the banking and financial services industry, the key question in our minds is who's going to win, Arthur Bunds or Paul Walker? And that's the big question around the world. Which way is inflation going to go? Sleep at night, you feel inflation is coming down. You wake up in the morning, it feels like it's going up. And at this stage, fog chal raha hai ki inflation kam ho raha hai. Who knows what's it going to be next week? So that is one big thing out there which will drive global inflation, global interest rates, global growth. The second one in our industry is how fast are we disrupting ourselves? If we don't, customers will make sure we are out of business. We better get our act together and fast as we can. These are the two things in our industry. On the broader India scale, I think there are three important points which I think India really needs to strategically take forward, and we need to think about it deeper. One, we have the heft on the global scene. We've reached scale and size, but we need to, for anyone to be a sustainable power, it has to be disproportionately powerful militarily and defense. And India is spending a hell of a lot of less money compared to what it needs to do on the defense side. True power comes first and foremost of all from military power. I think we need some ways to go that, and that will mean significant budget spending. Second important point in that context is the world's pretty clear that planet Earth is in trouble faster than we are able to sort out our differences. And therefore, sustainability is going to be the big agenda for business opportunity and for finding ways of gap funding to save planet Earth. That is going to be a big priority, and India will not be able to say, our developed countries have sort of used the planet so long, and therefore we don't have the luxury of time. And the third one is for India. For all the wonderful things we are doing, we need to get our trade competitiveness up. At $100 billion negative trade deficit with China, we have our work cut out. So if we get these three things as a focus for India, I think it's clearly the next 25 years belonging to it. Thank you.
I think many points have been made. I just want to make a few points on why the fundamentals are in place and what are the trends and why India is well positioned in that environment. The last decade, I think we have gotten a lot of things solved. We have a very strong policy environment and our banking system is very, very strong today. I think very stable, well managed. Corporate balance sheets have been delivered by and large. And even the mood in the country is very, very positive. Consumption is going up. So all the data points indicate that you've got a very solid base from here to take off. To my mind, there are 4 trends. The first one is, you call it digital or artificial intelligence or whatever. By far, India probably has the best digital public infrastructure. And we have leveraged this digital public infrastructure and have done national programs of mass scale, which you cannot find too many examples around the globe. So this backbone will play out in creating new business models. There'll be more startups and also more delivery models even in established companies. I don't want to get into that, but we can talk a lot about that. The second one on energy transition, our energy today, what we spend will quadruple in the next 25 years. That's the kind of demand. We are probably the only nation which will produce all the renewable energy for additional growth and not for replacing coal energy. So it's always easy to support growth than go back and replace, shut down something and substitute it with new energy. So I think the energy transition is a very exciting thing, and I don't think we'll just stop with solar and so on. There will be more technologies that will come. Definitely hydrogen will come, but there are many other things will come. SMRs will come. So I think over the next 25 years, it's going to be a very exciting energy story. Third, on the supply chain transition, whether it is a global crisis or not, the supply chain of global companies requires a very strong base in India. And we are seeing that. It will happen in batteries, it will happen in electronics, it will happen in semiconductors, it will happen in pharma, it will happen in materials, it will happen in biosciences, food. So I think this opportunity is enormous. And this is happening now. There is no question that there is any doubt it is happening. And in fact, you're having to let go projects because you can't do everything. I think funding is required. More money has to come in. For that, the execution has to be better. Investors have to see returns. And one thing that probably you'll bear me out on this, usually the rupee returns don't translate to dollar returns, but currently it seems to be happening pretty much close. So this should be exciting for many of the international investors. So I think those are the things. And what we need to do, I can speak, but I'll leave it now and come back later.
Thank you for having me, Shrutijeet. I think the big opportunity India has is to be the talent destination of the world, right? If I just look at tech and tech-enabled services, today we employ about 5.4 million people across the country. If I look at that number 10 years ago, it was half that. I think it'll be double that in the next 10 years. And the profound change that has happened over the last 3 or 4 years, I would argue, is that people came to India historically for cost and they stayed for quality. But people today are coming because that's where the talent is. And it also happens to be cheaper, right? So how do we maintain this advantage? I think we've got to be very purposeful and obsessive about skilling and reskilling, right? And that requires a lot of partnership between academia, between industry, and between government. Because our play historically has been at the bottom of the value chain, but as new and new technologies emerge, as the opportunity of new technologies emerge, how do we move up the value chain so we truly become a differentiator from a talent perspective? So I think there's a huge, huge opportunity which is ours for the sort of complete mass capturing, and we shouldn't lose that. The good news is I think there's a lot of collaboration that does happen between industry, academia, and the government is incredibly actively involved. And I think we should sort of sustain that. So I think we can really own talent as we look out over the next decade.
Hi, good evening, and thank you for having me here. I think taking it from an FMCG lens, I think what's exciting is that India consumption is the opportunity. We are already large, and the headroom to be larger is huge. So if our consumption per capita is X, even Indonesia is 2X on FMCG and China is 3X. So the headroom is huge. I think the second great thing is that most FMCG companies make in India for India, and therefore are relatively insulated from some of these larger happenings. And just from a perspective of what we should be focusing on, I think as we get India from this X to 2X to 3X consumption of FMCG, we are going to see waste and pollution increase. And how do we manage that as we still drive this growth, I think is one of the challenges that we need to work together to solve.
Thanks for having me here. Talking about our industry, which is investments and trading and etc. So the last 3 or 4 years has just been phenomenal. So I no way in hell I would have thought that this is possible. I think one thing that stuck out in the last 4 years is how our market infrastructure has done. I mean, people would have questioned if we can actually scale. I think thanks to the digital infra that's available, thanks to how the exchanges, the depository, the entire ecosystem is set up. The fact that in March of 2020, the entire capital markets worked without, even all the volatility, and we turned out okay. So I think it's been good time, but at the top of all bull markets, it feels like good times. I think one of the things that bothers me is the fact that the markets have grown so much, and there are a lot of people who come to the markets maybe with the wrong expectation that you can somehow make quick money in the markets. Maybe platforms like us have to do more to help our customers do better with money, because today a lot of platforms have taken a stance of just being a platform, saying we enable transactions. So you can take the easy stance of saying I'm not really involved in decision making. But I think the onus is on platforms like us to help people who are coming to the markets to help do better. I think what India truly needs is an advisory network. For a country of 150 crores, we have 1,000 plus advisors. Registered investment advisors, so people who can help customers too. Because today, typically financial products is sold through distributors. But I think we need advisors who have no commissions from the manufacturers to be kind of selling financial products in the country. I think if we want the markets to truly expand and you want the customers to be truly sticking around for long periods of time, we need to find ways to enable the advisory network in this country. I think one of the problem statements there to solve is there is no predictability in cash flow for advisors. Because if I'm your advisor, I have to come to you at the end of every month and ask you for an advisory fees. The way they've solved it in the US is to have a structure where the broker acts as a custodian and the advisory fees can go from the custody itself. So maybe structures like that is required, but we need to do whatever to help figure how do we take this 1,000 advisors to maybe, for a scale of this country, I think we need at least a few 100,000 advisors.
Nithin, you saying this reminds me, Nithin is a CEO I greatly admire, and Zerodha is obviously an incredible company. But, he keeps trying to tell the world that take it easy, don't be so exuberant, and no one seems to be listening to you.
Yeah, no, I think if you think about business like a long enough horizon, if you're not kind of thinking about just the next 3 months, 6 months, but if you're kind of thinking about the next 5 years, 10 years, you don't want customers to come churn out and not do anything through their lives, right? You want people to be active in the markets, because the way market expands is through word of mouth, right? You can do all the advertising in the world, but truly the way it spreads is word of mouth. I'm investing, I tell my friend, and the friend says, where are you doing? What are you doing? And so you want that to continue happening. And that means you need, because otherwise, if you see, historically in India, what's happened is that at the top of every bull market, we had a large participation, but all disappeared very quickly after that. You don't want that to happen the next time around. And if I think, every platform, everyone in the capital market should be talking exactly what I'm saying, because if you think long enough, we need people to be active in the markets for long periods of time.
It's amazing that you speak the truth in the media. We are used to CEOs who tend to downplay the risk factors of their company. And here is a CEO who's calling attention and saying, hey, you think there is no risk, but actually, our business has all of these risks. That's wonderful. Mr. Chandrasekaran, I want to come back to you. You gave a really good recitation of the advantages that India has right now. What would you say are the risk factors that we should watch out for?
I think geopolitics is always a risk factor. So nobody can predict. I think when the Russia-Ukraine happened, that was a shocker. And actually we all were coming back to normalcy after COVID, thought that life will move on. Then the Russia-Ukraine happened. And before we could realize this whole Middle East one, Israel, Hamas happened. So we got to watch the geopolitics, because the geopolitics has a lot of implications on commodities, on oil, and many, many factors. Anything that happens in the geopolitics can substantially alter your supply as well as input costs. That's one big risk. The second risk, I would say, is execution, because there is so much happening in India. Even if you take a banking sector, Uday is here, so I should probably not say this example, but I'll take the risk here. I think we have a asset book size of about 200 lakh crores, something like $2.5 trillion. If you assume, say, India has grown in the last 25 years at a CAGR of around 6.5, 6.6%. That is when we didn't think that we were doing well. Now everything is positive. Consumption, domestic economy, exports. So even if you assume a 7% growth, the assets have to increase by an estimated $400 billion a year. Can we do that? We've got to capture that. It's an enormous opportunity. You take every financial services, you take enormous wealth management, if you take, it's a huge opportunity. So all the numbers are just mind-boggling. What every year we have to add in order to be able to meet the demand. You take that, Tata Tech IPO. For a very small retail book, the number of applications. So there's appetite, huge appetite. So if that kind of appetite is there for investments, how are you going to capture? The execution risk is very, very critical, whether it is in terms of capital, in terms of execution, and in fact, the entire power infrastructure. I think the one single aspect globally for any country to win is only one: cost of power. Stability and supply, cost of power. Whoever is the cost of energy is able to do a fantastic job, so many things will happen. So given our demand in power sector, we have to do a lot in terms of the grid, in terms of the transmission, in terms of the true renewable power. So execution is Uday talked about defense investment. So there's going to be a significant capital that's going to be required. So there is a lot of opportunity. It's no-brainer to say that it's going to happen. So whoever is willing to participate is going to participate, and whoever is going to be hedging their bets may lose out. But at the same time, execution.
I want to ask you about manufacturing, and your group, of course, has many great manufacturing businesses. How are we doing on manufacturing? We've seen some early success in, say, electronics manufacturing under the efforts that have recently been made, including with PLI and so on. What's your prognosis for India's efforts in that area?
I think advanced manufacturing is happening. See, the problem is, if I can be critical, the problem with media, any critique is the jury is out next day morning. So advanced manufacturing is not that can happen tomorrow morning. It's not an app that you can develop and launch in 1 week. So I think whether it is batteries, we are making significant investment, huge capital in manufacturing. We are committing across sectors. Whether it is semiconductors, whether it is batteries, whether it is electronics, and the entire value chain will happen. There is a lot of demand, a lot of opportunity. But it's not going to happen
overnight.
January 1st, 2024 or January 21st, 2025, you cannot declare victory. You will see growth. We will still do most of the things in a much faster timeline than anything that happened anywhere in the world, because all forces want it to happen. So when the manufacturing shifted to China, yes, it was the US companies wanted to do it and Western companies wanted to do it, but it was not like a do or die. Currently, the customers want it, companies want it, governments want it, geopolitics wants it. So there is a lot of stars which are aligned and rooting for it to happen. So it has to happen, but it requires capital, it requires talent, it requires infrastructure, right? And we will struggle with that. It's not going to be a smooth ride. So we'll struggle with some of that. But it's happening. I'm absolutely bullish and confident about the opportunity that is there.
Awesome. I will now move on to Mr. Kotak and talk a little bit about interest rates. Mr. Kotak, we seem to be moving to a paradigm where high interest rates are becoming the new norm. Emerging markets like ours in the developing world have benefited for decades from the capital flows in this direction. Do you see a risk to that sort of structural flows?
I wish I knew. And I think there's one point which I do believe is the era of very, very low interest rates, near zero interest rates, which we saw for a while, and genuinely lower rates even before COVID, I think that era seems to be behind us. Now, whether the sustainable rate, and I'm using the US rates, whether the Fed rate is going to be sustainably at 4%, 4.5%, but it's not zero. So we are in a world where there is going to be price for money, and money is not going to be available as most people thought about it. And therefore, from an Indian point of view, I think we have to assume, give or take, the current next year. Of course, the question is when interest rates come down. But we got to be clear that even if Indian inflation moves to, say, sustainably around 4%, which is the target of our system, a interest rate regime of repo rates between 5 and 6% at least is looking the foreseeable future on the lower side. Of course, if there are surprises, current rate, of course, is 6.5. Who knows? It could be higher. But I don't think businesses should be really planning on the basis that the base Reserve Bank repo rate is going to be below 5% in the foreseeable future or the next few years in terms of your planning, and from the current 6.5. And on the higher side, subject to what happens. Key issue for India is, I think 100, 200 basis points in rates is something which we have to take it in our stride as the volatility. The key issue for India is capacity. And I think Chandra alluded to this. How are we going to create capacity? And Indian mindset historically has been, let's do with a 2-lane road when the requirement probably was 4-lane and we should have been building 6 lanes. So we end up building subpar capacity in many of our. How are we going to create capacity at scale? And I'm glad we're growing at 7% this year based on the estimates. So most people believe 6 to 7% is the growth rate, which is what we can sustain. But what India needs is 9%. And if we compound at 9% for the next 25 years, we'll be a 30 plus trillion economy. And we forget a very simple point that we have a big denominator in terms of population. Despite us being the 5th largest economy in the world, our per capita is $2,500. And we have much lower in this. How do we get, if we grow at 9%, only then we will get over the next 20, 25 years, average Indians per capita being $15,000. And that's what we should aim at. Then along with that, how do we create a true equitable structure, which enables this $15,000 per capita really benefiting the vast number of Indians? That's the Indian aspect. So India has to build capacity. India has to build sustainability. India's got to make sure that we have wonderful cities, clean environment, everything works, and we will have to focus on things which are not very often popular to talk about. We have to internalize, of course, be proud of what we are good at, but deeply internalize things we got to get better.
And you're someone who has walked the talk in terms of speaking about things that are not necessarily popular. You know, everything we're discussing now in terms of execution, manufacturing, in terms of large ambitions, in terms of the size of the economy as well as growth, has to be underpinned by a very robust and sophisticated financial system, which is the industry you represent. You have said very clearly that there is bureaucratization of, the financial system, and it is not agile enough, and it is somewhat killing entrepreneurial flair. My question to you is, do we have a financial system that justifies or that can do justice to our ambitions as an economy?
First, I must make it very clear that India has done brilliantly in managing its financial sector in the last 3 years, particularly post-COVID. And you got to look at the backdrop. If you look at the period 2010 to 2020, Indian financial system went through so much of turmoil. Post the global financial crisis, India became excessively exuberant, believed that the problems were the Western world problems, and then you saw the Indian financial system peak between 2010 and 2000. And therefore, from a policy point of view, I can understand clearly that the first thing you needed to do is to make the system safe and sound. And I think we have done a very good job at making the system safe and sound. And kudos to the policymakers and the regulators across the board for really making Indian system solid. Financial stability of the Indian financial system is in great shape. But we need to look forward. And how do we create scale? We need to have more cars, more roads, while we need to minimize accidents. So in some ways, it is getting that equilibrium right between sound financial policy, financial stability, ensuring that we don't make the mistakes we have made. And at the same time, how do we get an aspirational growth of 9% per annum GDP? Because that is India's aspiration. That is what will take India out of the bottom end of the middle income to a 5-digit dollar number in terms of per capita. And it is managing both together, which is our greatest opportunity going forward.
Some of the language that Mr. Kotak has used in his remarks is also in his letter, the letter he wrote to the shareholders as he stepped down, in which he memorably says that the way to reduce road accidents is not to restrict cars, it is to build more roads and more highways and so on. Let me, on account of, we had discussion about quality, we had some discussion about human capital. Rishad, let me come to you on the rise of GCCs. The software exports industry has been a tremendous success story for India, perhaps second to none. There is now some talk that the rise of GCCs, where multinational companies are setting up their own captive units to do a lot of the work that they used to previously outsource to Indian software companies. That's a sort of a preferred mode, and their growth will come at the expense of domestic software companies. How do you view this argument?
Couple of things on that, Shrutijeet. One is, if I just look at the tech market globally, it's $5 trillion growing at 6 to 8%. So it's a big enough market for everybody to participate in, right? Just GCCs in particular, and I know that's become the flavor of the day, just to say some specific numbers, we have about 1,600 GCCs in the country. They employ about 1.6, 1.7 million people. So they employ about 30% of the people the tech industry in India employs. They generate 20% of the output. So it's good for the country whether GCCs exist or not, because they create value for the country, they create export revenue for the country, etc., etc. The interesting thing about those GCCs is many of them, over 60%, are very small. They're less than 500 people. So they're subscale. So I still believe, and maybe I'm looking at this with the glass half full, and I'm usually quite a sort of a balanced person as opposed to an optimist. But there are 3-4 things I think that tech services companies have an advantage of. One is the access to broad-based talent, and the broad-based talent that has an opportunity to work on multiple different things as opposed to working only for one customer in one industry. 2 is the advantage of bringing a diverse perspective, diverse across industries, diverse across markets, diverse across geographies to the customer. And customers love that. They want a perspective from outside of their industry. 3 is given the fact that that's because some of these guys are subscale, less than 500 people, the efficiency, both in terms of delivery and supply chain of tech services companies, especially the larger ones, I think is more efficient than some of the GCCs. And I think the ability to access innovation, the ability to invest in innovation, I think is also more, deeper. So I don't worry too much, because I believe the market is big enough, but I also believe that tech services companies have a differentiator that they can bring to customers. But the other interesting thing, just if I may share one more thing, it's very interesting. 40% of the GCCs that have been set up have actually had a tech services partner work with them to set them up to begin with, right? So they actually work quite deeply in a collaborative manner than sort of in extreme silo. So I'm very optimistic about where the industry can go over the next 5 years, and there's enough opportunity for everyone, I think.
Would you say that this trend will not put any margin pressure on your industry?
I feel like we're having an investor call for the tech industry, but look, this is
headline hunting.
Look, there's always going to be pressure as spaces become more competitive, and you've got to find ways to differentiate yourselves and sort of keep margins competitive. There's always opportunity. There's always challenges, like in any business.
Very well said. Exactly like in an investor call. Mrs. Bhattacharya, let me come to you now. Continuing with the theme on how robust and sophisticated a financial system do we need to have to sort of underpin our growth ambitions. What are the changes you would say we need? Do we need capital account convertibility? What are the specific changes you would say we need to make into our financial system to better support our ambitions?
Uday has already talked about how important it is for our country to be really underpinned by a very strong financial system. And I would say that needs to be supplemented with a very strong underpinning of technology. So while capital is obviously, one of the things that's very much required for any kind of enterprise, no matter whether it's financial or otherwise. But I think today what we really need to understand, and this is something that I'm seeing at very close quarters, and it bothers me every day, is the kind of tech evolution and where we are in it. If you look at generative AI, yes, there is a lot of hype about it, and people feel it's like one of those blockchain stuff, that's here today and maybe gone tomorrow. But let me tell you that that is not the case. This is something that is going to change every single space of work in a very different way. AI has been around for a very long time. So what's different about Gen AI? Why are we saying this when AI hasn't made that big a difference? The major difference is that AI was something which depended upon data being structured. And also while you are accessing that data, you had to do it in a particular computer language. So again, in a structured manner. What Gen AI does because of the large language model is it allows democratization of input as well as output. So the models, they are able to take in data, even if it is unstructured, as long as it's written in a language, natural language, it is able to take the best out of it. And therefore, the number of data points that it can handle is in billions and billions of them. Okay. So to that extent, it gets that kind of intelligence. And similarly, when you're asking for outputs, you don't need to go to your analytics department. You can write out the query in the language of your choice today. It doesn't even need to be English, and you will get an intelligent answer back. So what it has really done is democratized access to AI, which we never had earlier. And therefore, something that is democratized, like say WhatsApp. Why is WhatsApp considered a killer app? Because it's so intuitive, anybody and everybody can use it, right? And that's what Gen AI is going to do. It's going to make AI democratic enough for people to put in a lot of stuff and for people to take it out. And therefore, it's very, very powerful. Powerful in the way we work, powerful in the way we learn. So you can imagine that a class of 60 students can now have individualized curricula with monitoring of individual nature so that, every single individual can proceed at their own pace. So you can understand the potential of that. Say, for instance, our state hospitals. Today, the way they are overcrowded, they are not able to be served. What Gen AI can actually do is get the data from each one of them so that the doctors have the preliminary diagnosis already. And then, can actually spend time looking and speaking to the patient instead of just somehow scribbling down a prescription. So, the change it can bring for a country like ours, which is so short on basic services, is huge. But on the other side, there are risks as well. Like anything, it can be used for good purposes, it can be used for bad purposes, and those risks need to be mitigated before this comes out. And I do agree that this is still at the, if you compare it to a human being, it's still crawling. It's at a crawling stage, it's still not walking. But the fact of the matter is it's growing very, very fast. It's evolving enormously quickly. And that is what we are going to, see the impact of. And that is what we need to be aware of as well as prepared for. So whether it be financial services, whether it be any other services, that's something we should be preparing for that age. We really are at the cusp of a very big change. At least I feel so. I'm not sure that everybody would agree with me, but then I really feel that that's something we need to be very aware of.
So you're more concerned about the delta in technology and not less so in the financial system.
No, not that. What I'm trying to say that this delta in technology is going to impact every kind of enterprise, financial or otherwise.
Got it. Thank you. Well, on that, let me come to you, Romal. You work with a lot of Indian companies on tech-based transformation. On a scale of 1 to 10, how would you say India Inc. is doing on leveraging technology for business transformation?
Yeah, so I'll probably take it at two fronts. One is, and I'll probably give some examples. I think everybody has heard of FASTag, GST. But you see the impact, what it has actually done. We would travel about 250 to 300 kilometers. Our truck, our freight would travel. Right? You take the United States, that's 800. Post GST, that is in 6 years now, we now travel about 600 kilometers. It's quite phenomenal, the change. At FASTag, because of one of the interesting things is, last year, the FASTag collection was about 80 crores a day. This year, it's 200 crores. Doesn't mean that the traffic has, or that many vehicles have actually come in. It's also transparency. But we saved 17,000 crores on fuel because the waiting time has moved from 12 minutes to 47 seconds.
That's right.
So you see some of the impact that digitization has actually done, which is not only impacting, in terms of speed of transport, but also in terms of just the ESG and everything else. Second, Mr. Goenka is sitting here in the room, so I thought maybe I'll take an example. Tech to automate, digitize is good, and that's the basic step. But when you start making business models out of it, what they looked at, for example, is to say that, do I sell a tire per kilometer or do I sell a tire per capex? Now, this is a business model change, but how does tech enable it? Which is get all the IoT devices onto your tire, look at the demographics of where the fleet owner is actually driving, and then build an AI model and a machine learning model to say, how do I actually drive per kilometer? How can I charge? So if I drive in the Himalayas, if I drive in southern India, if I drive in the deserts, the pricing has to be different. So that is what India Inc. is slowly starting to do. And not just the automation, digitization is, of course, very important. But the third is also the India stack. Right? I mean, you really look at Jio in some sense, and the telco war. Using the India stack, the number of subscribers they were able to get it done wouldn't have been possible without using that. So that integration into our business and business models is something that we see a lot more happening. And India is now running some of the really significant transformation. Even the government. I mean, we are working with the government to digitize the parliament. There's no parliament in the world that is as much digitized as India is. And of course, some may believe that why we're so transparent, but it's for the right thing. So I think that progress is really happening. If we can integrate a lot more into our business models, I think India will be more successful.
Prabha, let me come to you now. And let's talk a little bit about the Indian consumer. We hear a lot about the demand for premiumization from the Indian consumer. That is, from somewhat of the higher strata of the socioeconomic pyramid. And we see somewhat confusing signals from the lower end where there are newspaper headlines every other day about there is some sign of recovery, but there are also signs of persistent sort of distress or plateaued demand. Tell us what the Indian consumer is up to. What do they want post-COVID?
Oh, wow. How long do I have?
30 seconds.
So I think, firstly, there isn't a thing called one India, right? Obviously, if you cut it by geography, you cut it by demographics, by wealth, by anything and everything, there is an opportunity for India as long as you have a strong consumer underpinning or a consumer insight on which it sells. But if you take a look at what's happening currently, or at least what we are seeing currently, premiumization continues unabated. It grows rapidly. There are enough consumers in this country who have the money and have the propensity to spend as well. And I think there are a lot of businesses chasing those consumers, and those consumers are responding with spending. Equally, at the other end of the spectrum, we are seeing stress in terms of consumers finding it tight, and also having a lot more outlays for their wallet. Like the entire betting/gaming industry didn't exist. And now that's a large industry that's taking up a lot. Everybody has a phone, you've got to pay for data. So there are a lot of expenditure. Education expenses have risen quite dramatically. So there's a lot of expenditure that wasn't there earlier that's now fighting for a share of wallet and putting pressure. We've also gone through this cycle of fairly high inflation, which has raised the price of a lot of FMCG products quite steeply. And so the combination of these does make it that at the bottom of the pyramid, the growth is quite slow.
Thank you. Lakshmi, let me come to you now. The one policy excuse that about Indian agriculture that is always made, and you do a lot of work in the farm sector and with farmers, is that we have fragmented land holdings and therefore we can never really do well in agriculture. Is that really true?
Yes, that is, because the majority of our farms are still small or even marginal. And that's why the need for innovation comes. Today, that group of farmers is facing the brunt of climate change. There's often water shortage. Soil health has become an issue for them as well. And if we look at other inputs also, they may not be well suited for the needs of those farmers. So there are two areas where I think we need to tackle that. 2/3 of our country is still dependent on agriculture directly or indirectly. And a vast majority of those farmers are small farms. So the need for innovation is huge. And that has to be a multi-stakeholder engagement. Some of the positive things we're seeing, one is policy. The other is our farmers themselves, because of the dramatic increase in digital connectivity at their end, are pushing for innovation quite aggressively, creating their own innovation sometimes. We are, I think, have the highest or one of the higher proportions of self-employed globally, and a lot of that is in the rural segment. So some of that innovation is showing up there. So I think some multi-stakeholder engagement is a must. If it is a priority sector, we need some funding alignment around it and creation of hubs where you see universities, companies, the government, and customers themselves come together to create and design those innovations, be it in water management, farm management, whatever the area, that are uniquely designed for us. We can't at all copy what we see in markets where there are much, much larger farm structures. So that is definitely the need of the hour. To give you an example of the multi-stakeholder engagement, one thing we've done is to work with a few startups and universities. We're also at IIT Madras overseas as well, and create farm management systems that we hope to bring over time to India. Precision farming implements that will save water, improve soil health, be better for the environment. And again, that is across stakeholders. We launched an electric hydrogen tractor prototype recently. And at some point when the maturity comes, surely there's quite a big opportunity for us to innovate in India, for India. It has risen as a focus group for the country economically and is critical for growth. The second is per capita growth. I do think we need an investment across the entire agri system, storage, handling, research on inputs, and importantly, value addition at source. It is one thing that we have very good production numbers vis-a-vis our population. But over and above that, if we could attract and create food processing hubs on one side, agri-tech hubs on the other side, the food processing hubs will really, the ag tech will make it productive and prosperous. The food processing hubs will also help retain value add in our country rather than shifting that to another country. So food processing is quite critical for per capita equitable growth that includes the rural sector. So I think really there's a lot to be done in rural India that can explode innovation, increase prosperity and productivity. The third is NGOs. We have a very strong NGO and government program ecosystem in this country that's very core to the sector. So for example, one of the interventions we've run is to provide a not-for-profit platform for customers to rent equipment to each other. So rather than buy new equipment, they're generating further income as a micro-entrepreneur rurally itself. The second is with the digital infrastructure really picking up, we see our farmers finding very, very innovative solutions. They're able to find their own markets, innovate on their products, find the right prices. And that's something where we can work with that ecosystem, with NGOs, with the government, and see how do we then reach some of this integrated farming to the small and marginal farmers to help their rise into prosperity. So there's a lot to be done on ag-tech innovation, on food processing, and on helping the below subsistence agricultural sector.
So could you name one ag-tech innovation that you've encountered that has impressed you the most?
I think it has to be, I'll give you two. One is very simple and one is quite high-tech. The simple one is actually, we had a contest recently where we had our customers propose engineering designs that are innovative to them. And one farmer said he had labor shortage in Tamil Nadu and quality of labor was a shortage in his dairy, infecting his cows, reducing his output, hitting his income. So he has designed a milking machine that can be run on our tractor to, in fact, fill this labor shortage. So that's a very simple example. Another more high-tech example from the corporate side is something that we're working on in terms of with a startup on farm management systems, because precision software-driven farming will be the future. The question is when.
Thank you. Kunal, let me come to from farming to fintech. One way to summarize fintech today appears to be to say it's customers' delight, but regulators, maybe not nightmare, but at least not so delighted, it would seem. What's happening?
I think when it's physical world, the businesses have their own natural constraints in terms of how things are done. When it comes to digital world, the lines get very blurred. And it's a function of who is in what business really. For example, TikTok in China is also a very large e-commerce company, but also an equally large lending company. And when it comes to internet companies, revenue and profit pools seems to follow wherever the user seems to be spending their time versus all these labels we give to them in terms of fintech, e-commerce, short videos. All these labels are something that we are used to from the past. And now with AI coming in, the lines are get blurry very, very quickly. So that therefore the battle is of platforms versus what is fintech and things. So I think from a regulatory perspective, even companies that operate with multiple regulators have a challenge because regulators seems to be operating from the departments that they have. But the fact that the internet companies are born based on what users prefer to do is changing the way how it can be done. Now, the question is that the users are evolving much faster. All of us have a chief technology officer at our house between the age group of 5 to 20, which is driving the house's chief procurement behavior. And they don't seem to care about which tech are you from as long as they like your app. And one of the common words that we deal with nowadays is that, oh, I don't want to work in an uncle company, right? And it's a very scary situation to deal with because how do we know that we are also not in that category very soon because the pace of change is so quickly happening. So I think when we try to regulate something that can fundamentally evolve so fast is always going to be a challenge. But the good news is that there is innovation happening at a much faster rate. We have regulator that is innovating faster than most fintechs are innovating. We've been to events where the governor goes on the stage and does demo of 3 new features that are coming in. So I think we are in an interesting market where it seems like everybody is trying to outcompete and innovate. And Uday mentioned about speed. I think even for a fintech founder, we all feel that we are behind 2 years on our execution. And I think it's changing quickly. But to predict which company will be in what business is going to be very hard when it comes to tech business, unless we create strong regulatory reasons to keep them in these boundaries. But that will stop the innovation and we'll always be scared of other countries kind of moving faster on some of these choices.
2 wisecracks on fintech have stayed with me. The first is the fintech industry is a consequence of the inability of banks to hire good graphics designers. And the second is that all fintechs will eventually become lenders, and that's really the only business model there is. The first one obviously gives your industry too little credit. But what about the second one? Is that really true?
I think India's profit pools don't evolve as much as we think they evolve into different things. I think they are very close to laws of physics. You can find them in different forms of shape, but it'll remain in the same zone. So I don't think the method of distribution will change where the profit pools or revenue pools are. We'll probably be in the thing. And for example, we've seen the amount of e-commerce investment that has happened in the country. But if you look at the overall market cap and PAT, how many retailers make it to that list? So the thing is that there are many second order effects that drive these behaviors. For example, one of the strong conjectures I have is that every country with low female participation of labor, a large chunk of market cap will remain financial services. You cannot change that. And that's going to be a big trend to change for a long period of time.
Mr. Kotak, quickly to come to you, are we a bit too conservative on consumer credit? I'm of course referring to some recent regulatory actions.
Let me put it this way. The size of the market is huge. The penetration of credit per capita is still low. However, you could have a situation where there are pockets where we may have landed up lending a lot more. Therefore, from a policy point of view, you start watching the pockets while keeping the big picture in mind that the absolute penetration of credit in this country, whether it's corporate, commercial, SME, retail, is still at very low levels compared to the overall size. Therefore, the opportunity on credit is still huge, but you always have to watch out for particular pockets. And as long as you take care of that and take corrective action, the trend is clear.
Thank you. With that, we probably have to close, but I would like to do one quick rapid fire of sorts where everyone has to answer one question, which is the one thing about India today that delights you, except for Rishad, from whom I would like to hear 2 ways in which India should leverage AI. Yeah, we'll start with you, Nithin, and we will do a raise that side.
No pressure. No, look, first of all, you're giving me mic. So one is, AI is a big word. It's, people oftentimes use it very loosely, like the way people use the word digital transformation. And so from my vantage point, let me demystify it. I think there are two big advantages. One, we should really leverage AI for productivity. Because if we want to grow 6 to 8% a year for the next 10 years, we have to be much, much more fun. Two, we can leverage it much more for experiences. And given the paucity of time, I'll talk about the challenges and the opportunity to address the productivity. I think we've got to focus on 2-3 different things. One is we have to focus on data. How do we make sure our data as a country is not siloed, it's not biased, it's accessible, it's clean? I think that's incredibly important. Two is how do you access talent? We need much, much more talent. We need much more talent in different areas. Skills like prompt engineers, AI modelers, AI modeler validators, etc. There's huge opportunity around that. And the third, I would say, is infrastructure. If we want to be able to process data on scale, we're going to need much more compute and processing capability as a country. But I think there's a huge, huge advantage. I don't worry so much about the job challenge. I think like with any sort of technological change, there will be some losers and some winners, but we have to focus on reskilling and upskilling. So
wonderful. We'll go from here. One thing about India today that tremendously excites you?
I think it's just the pace of financialization, right? As in, I think it'll lead to Indian entrepreneurs being able to raise money from India and then the wealth creation happening in India. So.
I think it's the opportunity that's not in the distant future, but absolutely here and now.
Slightly answer a different question than the question you asked, because there is many things to be getting excited about. I can go on and on. I think 3 things we have to do. We have to make sure that education and healthcare is available in equal measure to everybody. That's fundamental. And with a very targeted date, we got to get women back into work.
I think one thing which really excites me about India of today is the confidence of an average Indian that we can do it. I go back to the generation when a lot of my friends believed the opportunity was outside India. Today, it is here, it's now, and we got to make it happen. It's one team, one dream called India.
If I may answer what Uday had talked about.
Please.
And what you said about consumer credit. The fact that, penetration is low, but we may be penetrating in the wrong places. And the question that you asked, Rishad, about what AI can do, AI can actually smoothen that out. Okay. But having said that, what excites me about India, the youth of India excite me. Because of the fact that they are far more aware, they are far more serious about innovating, and their risk appetite is far more. They are willing to go that extra mile. That really excites me.
Add on to what Arundhati said, and I agree, but also the youth from tier 2 and tier 3 cities that are coming in. And for me, in Chandrayaan, what was most important was a lot of our scientists were from tier 2, tier 3, not necessarily from the Institute of Science or the Institute of Technology, which means that education is percolated many places. And when we see the youth, their confidence and their hunger is far more. So I think that's what really excites me.
Certainly a time where I think we're going to see diverse and a vibrant, inclusive kind of economic growth should we play our cards well. As one of the panelists mentioned, you see a desire in all stakeholders coming together at the same time, be it policy, industry, across gender, youth. There are, of course, certain interventions to bridge the gap. But I think it's a self-confident India, very well placed globally and geopolitically. And it is a land of opportunity today.
The largest employer of India is inefficiency. And I see that it is kind of quickly becoming more efficient with AI and other things. And I think what I see in Indian youth is not having the tendency of relying on just being a job seeker, but becoming a risk taker. And the entrepreneurship culture is kind of real. It was a time where none of the entrepreneurs would ever be known in India. It will be only the celebrities. I think the shift in that direction of what is valued and respected is changing. I think that will be the fundamental building block.
Thank you. With that, we've come to the end of the discussion. And this rather insightful discussion is happening after close to 3.5 hours of jury deliberations earlier today to pick the winners of the Economic Times Awards for Corporate Excellence. So thank you all to jury members and all the panelists for spending all this time and giving us your wisdom.